I see you, I'm so happy to see you. You know, on our webinars, if you type into DIY, we have a lot of it. Do it yourself this, do it yourself that. So we want all of you to be able to do that yourself. And I'm not saying that just because you want to save money, so I'm telling you the tricks so you can do it yourself. It's not even related to that. And when people really trying something at their own, their understanding is deeper. And even when we talk to you, let's say you do it yourself, then you just decided, oh no, I'm not comfortable, I'm going to let Ying do it. And at this point of time, when I take over your file, if I say something to you, oh, you should be working on Schedule C, don't use other income line to do this because you will not have any chance to deduct anything, you will know exactly what I'm talking about. So this is where we say that doing it yourself, so that way you learn more. So how many people, I bet you if I'm in the classroom, I say, raise your hand, you will raise your hand because I'll say, hey, tell me that you learn better when you do things with your hand. You learn quicker when you do it yourself. I know you all agree with me. You will say, yes, 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 Ying. That's definitely the way it is. So that's why I say do it yourself. So 2021 1040, even if your tax return is done by somebody else already, even if you already contracted with Community CPA to do your tax return, and I would still encourage you, go to Free Tax USA, it's free. And you go on there, you try it. And so that's where this hour, and we will talk about how to do it yourself. Obviously, I won't be able to go to software, say you plug this number and click this, but what I want to give you is fundamental, because I want to give you benchmarks where you will benchmark whether you are doing it right or wrong. All right. First of all, the software online or TurboTax, a Free Tax USA, and the HR Block, all these software you have online, and make sure that there are 3 things I want you to know, and you really want to care. You want to care. Number 1, you want to know where your data is saved in that online software company. If you happen to have that data saved somewhere outside of US, and the data security is different than what we imagine here in US, those kind of data breach you see. And have you heard of people, a couple of years ago, we had this influx of fraudulent calls. They all have an Indian accent, but they are saying that they're IRS agent and you owe this money and you better go to West Union, pay for money, and you can pay, dollar, a cent on the dollar and give you discount. So those are a result of your data being compromised by people outside of US. So the call comes in, even have 202 number on it, shows up it's coming from Washington, DC, but with technology, this is so easy to do. This is elementary level IT fraudulent practice. It's not hard, okay? So it is really easy if your data is not here in US. And this is one of the reasons that Community CPA, we have been practiced for almost 30 years. And we have never, ever gone out to get, to subcontract a virtual office or anywhere outside of the country, because the data is a very serious concern. Where my data gonna go? Where am I giving my taxpayers' data to, right? So it's always here in US. Our company we use is called Thomson Reuters. It's no secret. It is one of the largest software company and works on hospital, law firm, CPA firm. They are the first 1 or 2 companies in the country, public company. So they are here and they are holding data in the bunker, and our firm's data is actually in Minnesota. They have a data center here, so our data happen to be in here. So this is where I want you to understand. Number one, you need to know where the data is. Number two, you need to know how you can download whatever you put in to your local drive so you can save it. How many times you use an online software, next day you don't remember how to log in. And then you call and nobody answers, so you give up. And whatever you did in there, you don't have it anymore. You don't know where that went to begin with. You also did not save a copy for yourself. So if you really work with an online free software or online software, you know that they're not going to be there forever. Did you already learn that lesson? They're not there forever, but you're here for 100 years. So you're sort of here forever. So you cannot let your tax data a couple of years just missing because I forgot to save it. I did do. IRS has a copy, but I don't have my copy. No, you cannot do that. So you need to figure out how to save that onto your hard drive. Number three, you want to make sure that the flow of filing. So when you log in and you got to, this is your personal judgment. You need to kind of realize whether you can understand the language they give you. For example, they're saying, and that, you say, do you have income? You say, yes. What type of income do you have? And they give you a list of choice, W-2, 1099, 1098, 1098B, and all of these forms. That's what I live for. I live it. I do this for a living, right? I know it. But maybe you are not. Maybe 1098B, what was that, right? What is a 1099S? What is that? I don't know. So if you got a list of that, you W-2, this is where you worked for an employer. 1099 NEC. Account that you should have received a summary. So if there is not a communication like that, that free software company is not worth for you to use because you will make mistake. Because the whole thing is about you tell them what you have, so they put your number in the right place. Can you imagine that you don't even understand what they're asking you, or what they're asking you make you confused and you feel like it is not really, I don't know what they mean by that. They say that, do you have a Schedule C? You sit there goes, oh, what is Schedule C? I don't know. And what do I do? And you ask your kid, they're not going to be able to help you. But those kind of questions doesn't exist when you work with professionals, right? So I am just talking about if you use a free software to do your tax return, and make sure there are three concerns, right? Number one, you want to make sure where the data is. You can simply just go to the help and ask that question. Number two, you need to know how you're going to save your entire data input and your entire forms. And number three, the last one, is you make sense of the question that leading to you, that giving you when you log in. If you like that way they communicate with you, it's almost like they speak your language, then you're good. But if they don't speak your language, they make you stop and pause, and then that means it's not a good software. So that would be my recommendation for you to begin with the software you use, okay? And no responsibility disclaimer, because you really want to take that to your own hand, okay? So make sure that you take what you learned with grain of salt. And that's, I love that term in English because I don't think I can find similar things in Chinese, the other language I speak. I just couldn't really find something like this. And it's very neat. But there are also Chinese words are very condensed. But if you translate that into English, it's become 3 sentences. It's not cool. So I felt like it is always interesting to see something that is so unique. It's just really English and a grain of salt. There's no such thing no such a translation in Chinese. So now I want to talk about this do-it-yourself versus hiring a professional. A lot of people ask me about that because when they are doing it themselves, of course, the benefit is really, really simple. You save the cost and you also learn, right? And I would put learn as the first instead of saving the cost, just because, it is really, sure, you save your cost, but you cost your own time, right? So time is money. That's really for people who are not busy and you don't think of that. And I don't think I think of that when I was a kid. Time is not money when I was a kid, right? But now when you are grown adult, you have a career and you're doing things and make a living, and time is money. And so if you do it yourself, you're spending your own money to make yourself work. That's a learning. So that's good. It's a benefit. Then on the other hand is, I'll tell you, there is a huge benefit about doing it yourself, because doing it yourself will give you options to try things out. And for example, if you got a 1099 NEC for $50,000 this year, and you're going to do it yourself, so you put in 50,000 and you see it right away how much taxes you're going to pay. Then now you're saying that, well, I'm paying too much taxes. I really should deduct some expenses related to that. Before I tried this, I was lazy. I didn't really want to do any work. But now look at how much taxes I'm paying. I think I'm just going to go do something, make it work. So I go back calculating my mileage and calculating my home office and calculating my other costs that are related to this $50,000 income. So I did work and I come back, I put that in again. Oh, this time is less taxes. This is good. Then I say, well, this mileage, I did 24,000 mileage. It's a lot of mileage. I really don't think my record is solid enough to pass IRS audit. If IRS audit me, they want to see my log, and I really just have half. The other half, I know it happened, but I just didn't really know how to put it together. And then let's reduce it. So you go in, you reduce it. Then you see how much you pay taxes. So this back and forth is called scenarios, right? It is what you can do, don't want to do. And then you give yourself options. You sort of negotiating with what you have and what you really want to put out for IRS. Not all of our business owners claim everything, I will tell you, because sometimes things are just not clear. It is not a clear cut whether you can, claim it or not. For example, I have a client and went to Hawaii for 3 months. And what was the reason to go to Hawaii? And because he had a client in Hawaii, so he went for the client for Hawaii. Original ticket was booked only for 4 days. But when he got to Hawaii and he got sick, so he stuck there for almost a month and a half, could not even travel. By the time he came back, and so do you charge the whole 3 month stay in Hawaii as a business expense? Would you consider brain tumor is a cost of that one client's appointment? Probably not, right? So, but he was on business trip. What kind of expenses if he did not stuck in Hawaii? So there we're debating, right? So not every situation in taxes is black and white. And of course, in this case, client would come to us and ask us what to do. So there's other things they can do and don't have to go through the tax form. So it is a business expense. And he went to Hawaii, and there's a medical side of expense. And then he also has other policies that could cover that. So there's a way to mitigate the situation, but whether to put on the tax form or not, it is going to be a decision. So this is where I say that you run your own scenarios in the tax software, so that will give you a limited scenario. And you can even try, okay, my business is going really well. I want to be a C Corp. or I want to be S Corp. So how is my taxes going to be? You can run scenarios on your tax forms, right? On your free softwares to play with that. That is really the benefit of doing it on your own. You can imagine yourself to the future, and you can negotiate the current, and you can actually choose the level of risk and you are taking. If you have a different tax position with IRS, there are even procedures with IRS. If you take a different approach, IRS would like you to write to them. They want to know your position, and then you can file it. So there's so many things you can do, right? But why people go to professionals then? And most of our clients who are here with us is not because they got too much money to throw around. So they're here to Community CPA to throw their money at us. No, that was not the case at all. Most of the cases is because the tax is a cumulative knowledge. You know, the tax changes, right? Every year there's so many change. I'm going to give you all these changes we have, you know, between 2020 and 2021, so you can watch them. But the thing is, these changes, a lot of them, when you experience more changes in taxes, with years of accumulation, it becomes a knowledge. It has become a way that you know exactly how the government moves. And you know exactly how quickly that can be implemented. Just like when PPP came around, and there is no talk about how this thing going to be accounted on the financial statement. So we started, you know, at our firm, we did our own research and we started to accounting them as a liability. And once it's forgiven, it's become equity. So we accounted them that way. But until we did that for very good 6 months, then the official announcement came out. So matches to what we do, right? So this is the knowledge that your tax professionals are accumulating. Just like you do good cookings and you have one recipe you repeated a million times, you do it so well. Tax people, same way, because they repeat it so many times, so they're good at it. So you are hiring people because they have the skill that can get to where you want to, or can see what you don't see quicker and faster. And you can also rely on the data that was handled professionally. So you know where the data is. And I just had an incident, one of our tax client, and you know, they're going through some kind of immigration work. So they needed document from 2009. 2009. If you are doing your taxes on TurboTax, I bet you won't get it. But we have all the record in our system, so we can pull out that particular W-2 from 2009 for our client because we have it. So the data is right here. Data is in the bunker and managed by Thomson Reuters and in underground. So we have it, we can assess that all the time. And you can always go back to ask data. That's what good things about professional firms. Firms like Community CPA firm, we're not disappearing. We're here already for 27, almost 30 years. So with that kind of history, we are here and your data is safe with us. And you can have peace in mind when your return is filed because it has our name under the column for the prepare column. Sometimes I see folks that they say, well, my tax return was prepared by my tax preparer and I got audited here and Ying, can you help me? But when I look at their tax return, it was not done by another party. It was saying self-prepared because there are people doing these services for you, but they don't put their name and number on there. They are not registered. They're saying that you did yourself. So when that happens, when audit comes, for you to say that, well, I didn't do it, if someone else did it, he did it, and that person did it. That person I cannot find anymore, don't know where that person is. You know, all of these talk with the auditors would not save you a penny. They will still charge you for whatever you did wrong. Okay, but if you worked with a professional firm, let's say if you worked with Community CPA and you get audited, let's say something went wrong and which had never happened in my in my years of 27 years, and our work is excellent. We never really have any issues with the data presented to IRS, but our client could get audited, very few, but when they get audited, and they will say, they will know, the IRS will know that is Community CPA prepared for it because our firm's information is on the bottom of your tax return. So the IRS will look at the tax return, assessing the responsibilities. Like say, and you ended up owing more taxes for whatever reason. And one of the reasons tax audit we have is a tax client we had for years. We have done all of this tax payers business and personal taxes, and she get audited. So we gone through the audit, and so the procedure at IRS is that they will look who is the preparer. So of course, preparer will get involved because some of the information the auditor think is wrong. They want you to explain why are you putting that on there, right? So the audit went on, and so the auditor does two things. Number one, they will say to the taxpayer preparer that you owe this much money and you did this wrong and you pay these taxes. So those taxes are taxpayers' responsibility. It doesn't matter you have Ying prepares for you or you are doing it yourself because it's your tax liability. However, if it is prepared by a professional firm, the IRS actually conduct a preparer penalty examination that you don't know. And it's just behind the scene. And only the preparers know and the preparers company know because the IRS will ask questions. IRS will measure whether you did it right or wrong. Why are you preparing the taxes with such a discrepancy, right? So they will conduct that service. If the preparer company is not doing a good job, trust me, they will be shut down. And in my process of becoming a community CPA from 1998 all the way to today, and I have seen I didn't really count, but there's a lot. Those small preparers that I knew, they're around our area, and it got shut down, closed by IRS, one after another. So that's because every tax return when it's being audited, the taxpayer get a set of audit, and then at the same time, preparer also get looked at. It's called a compliance audit. So with that, that offers you a comfort. You know that you're dealing with people. If you see this company existed for 30 years, you can have that level of comfort that we have a procedure in place. When your tax return comes, we have people who collect the data. We have people who input the data. Then we also have people who would examine the data. Then it's submitted. So there's a procedure in place to make sure the tax is right. In that particular example I was telling you, what happened is our firm, we have a different position to take from what IRS has. So basically it's related to asset depreciation. And we believe that those asset depreciation should go for general asset, but they believe that the company wasn't even getting ready to run yet. So they want to treat that as an organizational cost. So it will be depreciated over 5 years. But if it is a regular asset, we can deduct this 100% use bonus depreciation. So those position difference, we can argue. I argue with IRS, but we don't agree. So the IRS decided to assess taxpayer, but I also explained to the taxpayer it's not really a loss. It is just that your deduction couldn't really come in 1 year, it come in next 5 years. So those kind of things are tax position difference. You don't even have penalties. So normally the taxpayer probably would be charged with a $7,000 penalty for inaccurate presentation to the tax return, but in reality, and that penalty is not even there. So the IRS waived the penalty, and knowing that it's a treatment. It is a treatment that I believe I'm right, and IRS auditor believe they're right, but we don't want to go to appeals and tax court for that. And taxpayer don't really want to do it because she has a personal situation. She doesn't want to deal with that anymore. So we closed at that point. But actually, if we go on to higher court, and I am confident I will win. So it is more of a, you see how that become a responsibility of your professional people to know what to do. So this is the benefit. This is the benefit that why you would want to work with a third party, not just community CPA. I listed that way, but you obviously should choose someone that you're comfortable with. And don't go with someone you just don't know and never heard of. And even if you never heard of us, you Google, you come in, you interview people. You get a feel. Is this the right place to be, right? And not, community CPA is not a place for everybody, but community CPA is a place for people who are kind of like myself. I believe that the personality on the top actually transform into the client. So client recognize the personality and they know who they want to work with. So we have more than 10,000 clients. I didn't really count lately, but I think we maybe have about 12,000. We will, I'll report that some other time. And of course, here we say that to avoid civil penalty and accuracy penalty. So all of these, your professional would help you do. And of course, you save your time. So now I had talked so much about do it yourself. Yes, but the benefit of doing it with a professional firm. Now, I am assuming that you are going to do it yourself. So I want to give you the very key things you need to know this year. Okay. And when you once you know that, you can look on your tax form to see whether it is there when you finish your input. Okay. So the number one I want to show you is child tax credit. And this is the one has changed a lot in 2021. So your 2020 tax form is not working for 2021. You need 2021. And when you put your kids in there, because when you open up your software and it will ask you about your family situation, just make sure you put your kids' birthdays and everything there. And then it will calculate for you. From 0 to 5 years old, each kid should get 3,600. I understand there's an income threshold. If you look at the bottom paragraph in the income threshold, it is 150,000 as a joint couple. Like if both of you make 75,000 a year together, and then you're over that threshold, then your child tax credit won't come to play. But anything below that, so you will have the 3,600. So when you work on your tax software, and you will say that, oh, I'm in the situation where I have I'm just trying to imagine a situation where you filed divorce. And you filed divorce in December 31st, 2021. So are you going to file joint or are you going to file separate? So maybe you are divorced so peacefully, you two can still work together. But if your joint income is so high, and then all of your kids are not having the child tax credit, maybe I just say that you should execute your divorce right now, right here, and do your own tax return, single and single. Maybe one of you would qualify for the child credit, right? So there will be scenarios in your mind. Sometimes you'll realize, oh wow, if I did this, actually my child tax credit come back. So you will start seeing those things. I'm not saying that to teach you see it, so you're gonna file a fraudulent return. That totally is not what I'm saying. In reality, I'll tell you, the technology had made government so efficient. And I will say that even if you have some people, well, that person did that for years and nobody ever catch him. He always did this. Even if that is the case, it's not going to be the case right now. And I want you to know that when people are doing those kind of things, when they get caught, they never come back to you, say, hey, do you remember I bragged about how I do taxes? And now I got caught and I have $500,000 I need to pay IRS. People don't tell you that, right? So don't ever compare your situation with anybody else. You just look at yourself. So if the right thing you do and it would make you have more child tax credit, that's what you do. But to really cheat and lie and to do things that are too great and it's not right, and then eventually I won't say eventually, in 36 months, you'll be caught. Okay, it's not even take 36 months. It takes 24 months. A lot of stuff takes only 6 months. IRS system is improving as we speak every day. And they have ways to figure out what people are doing. So they will do special project to catch people, okay? So now, one thing, if you have a child who turned 17 in 2021, so this year they're 18, last year they were 17, remember they got 3,000, you need to look for that, right? So this is where when you do it yourself, you need to have that thinking, okay, I should have my son still have 1 year, because prior year they end on 16 years old, but we extended 1 year in 2021. Okay, then the other thing I want to mention is child tax credit, child care credit. This daycare expenses are so much for 2020 and the 2021. And I literally, even though I don't have babies anymore, but I really have clients, when they give me the amount of child credit, child care expenses, I am shocked. I am sitting here thinking, yeah, it made it impossible for people to work. No wonder nobody working. No wonder moms don't want to work. How could they work? And they would send the kids to daycare, and probably the kids cost more than what they're making. So this is where the dependent care credit come in, reflected what government's good intention. They're trying to help. They're saying that if you have more than one child, and it is up to $16,000 you can claim. That's a $10,000 more than what you had before to claim. Okay, so child care credit is really up by a lot. So if you do have a daycare, let's say if you have parents who actually taking care of your child, and you pay them for take care of your child, and you never thought of to claim it, maybe it is time this year, or maybe your child, your daycare and had this expenses, and that you had a W-2 with $5,000 pre-tax saving, then now without the 5,000 and your amount is less, and in the past you don't really care, but no, don't, this year you want to put in to get as much as of credit as possible. Okay, so that is another thing I want to mention to you. Just keep in mind, if you have a little child, go to daycare, and you should know about that. And earned income tax credit, you should know about it. And earned income tax credit obviously is for lower income individual, but in the past, they only made available to people aged 25 to 64. And if you are not in this age group, you don't even qualify for it. And know that it's got expanded. It's got expanded in the way that they say, well, we lower that down to 19 years old. But if you have a child at age 18, you also qualify. So this is very different from 2020. And if you have a child, let's say if you have a baby, you call them baby because they are 18 years old and had a little baby, and you don't know what to do. And normally in the past, the parents just take them over into their tax return to file as a dependent. Maybe that is not a good way to do it. Maybe to have your 18 years old with that child to file an independent tax return to claim earned income tax credit. Okay, so see, when you do that yourself, folks, you can explore. You can try it. And everything I said here, the program is already capturing it for you. It is just when you answer questions, you need to answer really carefully. For example, when you come in to input your income, and when you come in to set up your taxes for your 18 years old, it will ask you whether this 18 years old is a dependent of any other people's tax return. And you need to know that because you are aiming for earned income tax credit, so you need to answer no. So mom and dad, you cannot claim that 18 years old anymore. You leave the 18 years old on the separate tax return, and then she worked at Red Lobster, made some money. So you put her earned income in there and put her baby there, she will get earned income tax credit, not a small amount. So you want to know, okay? And unemployment compensation, this is another thing that caught a lot of people very surprised, because in 2020, when you claim unemployment, when you have this 1099-G from the government, shows you unemployment compensation, you actually can, anything above $10,200 and you pay taxes. Otherwise, you don't pay taxes. So a lot of people end up not paying taxes for that money they got. But 2021, they stopped that. You still got unemployment insurance, very bad. You're going to pay taxes on it. You think you got 10,000? No, you're probably going to end up paying $2,000 taxes on it. So it's really, it's a thing that the government, again, is at play. The government says that we no longer wanting to help people unemployed because pandemic is better and they should go for a job instead of getting unemployment benefit, right? So that's where that, the politics are, synced in to the policy of taxes. Did you see that? And I see every move in taxes has a lens. It has a different color of a lens for what the government wants to do. So a lot of more economic economic development programs or initiatives are kind of pushed by the Republicans. But a lot of social welfare enterprise side of things are actually pushed by Democrats. I'll say both are good. And I really want to say that we are a great country. It's not because the Republicans is always in charge. It's also not because the Democrats is always in charge. It is because they are taking turns to be in charge. So we cannot be too far right. We also don't want to be too far left, because economic development need a balanced power. So this is where I support that, because as an employer, as a small business owner, and I don't want to see people are incentivized to go for unemployment benefit. And in fact, our folks in our firm, we operated for what, 30 years? Do you know that we never had anyone went on to apply unemployment benefit? That just tells you that every single soul come through Community CPA are very determined to work a career. If they're not here, they're elsewhere, nobody at home claiming unemployment benefit. That's a good spirit. So this is a good spirit for government to do, and I totally support. But for you, when you do taxes, if you happen to have unemployment income, you already find your job, know that your unemployment income is 100% taxable, and it is going to be taxed pretty heavily because you have your W-2 income already. So your rate is already went up and you probably pay about 20%. Just want you to know, okay? Now, this piece is actually related to older people like me. Yeah, I'm not yet there, but I understand when you get to 70 and you will have to take money out of your retirement plan. It is called required minimum distributions. Like you can't save your money in the retirement plan forever. You have to come out, pay taxes. So a lot of people, a lot of retirees, they don't really need the money because they're probably well doing, or they have money, they don't spend, they don't shop like they used to anymore. So they don't want to take the money out. In 2020, they don't have to. But in 2021, you have to. If you don't, you will pay. You will have penalty. Okay. Then our next thing we want to talk about is this standard deduction. Standard deduction also increased. I just want you to pay attention to the standard deduction. Folks, you don't have to use standard deduction. If you can add up all your expenses, then it's bigger than your standard deduction. When you run your software will ask you all of these expenses. So don't be lazy thinking that, oh, I'm just gonna use standard, I'm not gonna fill in all of these. Don't do that, because on the state side, some of your input, for example, medical expenses, and if you put them in, the state actually have a different benefit for that. So don't save your time, okay? Try to fill in all the numbers there, medical insurance cost, medical out of pocket, and the taxes, and your car tag, your property tax, your income tax, every tax, just put that in. And then on the charity donation, just put that in. Whatever you have, please don't save that space, okay? And then if you gamble loss is in here too, all right? So you want to put them all in. Even though you add up is much less than the standard, your computer choose the standard for you, but at the state level, you will get a small benefit, okay? So just keep that in mind, and let yours do standard deduction if you need to, but you want to still fill in the numbers. Now, the next slide, I want to talk to you about long-term capital gain. So we have a lot of folks during the pandemic years, they become day trader. They become a stock trading online. So anything related to internet is booming. So same thing with trading, right? So I tell you that this year I had the most increase of people coming in wanting to know things related to day trading. So long-term capital gain, folks, I want you to know this is such a good benefit. It has been survived 2 presidents already. So Donald Trump has it, Biden has it. So nobody really did anything to it. And it's still here. The maximum tax rate for long-term capital gain is 20%. You see that? 20%. And I just want to show you that when you have capital gain, if it is long-term, means if it is over a year, like you hold it for over the year, when you sell the stock, it is long-term. That long-term gain, if your total income is less than 40,000 as a single, okay, 40,400 is a slow increase in 2021 as a single, you know that gain is not even taxed. So just make sure that 40,400, there. The W2 is 30,000. Then you made $10,000 capital gain. Then 30,000 plus 10 is 40, right? Then your 10,000 capital gain is not taxed. It's tax-free, 0%. So I want you to know that. So when you are doing day trading, if you have capital gain already and you know your income is not there in that year, you can enjoy lower tax and you would cash that out and buy it back in. But don't buy it back in within 30 days, right? It will become wash sale, right? If you do that. So that's what rate information I want to give you. And a lot of people only knows about income tax rate. Yes, got increased a little, but really the long-term capital gain didn't change. You know, long-term capital gain is just not stock, right? It could also be for your small business and you sold it. You hold it for 5 years. No, 5 years, you probably qualify for something else called Section 1202. Let's not talk about that. But let's say you made a small business for 3 years and you sold it. And you made a capital gain. That gain, if you sell it for 40,000 and you made no income in that year, you walk that 40,000 for free, right? Makes sense. Makes sense, right? I want you to understand what I'm talking about. Student loan relief, I just want you to remember one thing. You do not pay taxes on that student interest. A student loan was forgiven in 2021. So starting 2021, most canceled student loan debt that incurred for the post-secondary education, which means the university college level, and is non-taxable. All right, so don't that, 1099-C, go pay taxes. Don't do that. And make sure that it's non-taxable. Most of them are. And if they are taxable, somewhere in the document you should know, but normally they're not. And of course, in 2021, if your employer was paying tuition fee for you, and that's normally taxable, and the $5,250 college loan paid by your employer in 2021, and is non-taxable for you, okay? And so those are just pieces of information deposited in your mind. You will use it if you have it. So Charitable donation. I want to show you this one because this is $300 per return per tax unit. What I mean by it is not per person. Okay, so in 2021 was 300. That's on the first page. I will show you where they are. But in 2021 is 600. So let's say if you do church donations, right? Then you can put $600 here, then leave the rest in the Schedule A. Okay, that would help you to deduct more taxes. I'll show you where this $600 goes and in the moment. And I also want to mention about adoption child, this qualified expense, this much you can deduct taxes, $14,440. Just know that if you adopted a kid in 2021, that's what you're supposed to know. You have a credit, you have a adoption expense deduction available to you. And this is a state gift tax. And I just gonna briefly mention that to you. You see it doesn't change much. So whatever Trump put in is still there. But when President Obama comes and he has changed the George Bush's estate taxes down up from 10 million down to 1 million or 3 million. Don't remember, but you know that there's no change basically. Okay, and the standard mileage. And remember, if you're running business, you have 50 cents a mile in 2021. Down from 2020, okay? Just keep that in mind so you don't calculate it wrong. And that's what I want you to know. And for medical, and the down by 1 cent, it used to be 17 cents, now it's 16, okay? And no changes for the charitable driving. Now, let me stop sharing the PowerPoint with you, and I want you to see. See that $600 I was talking about. I want to show you briefly where that is because a lot of people were asking that question. So on this tax form, folks, did you see? Okay, this is our 2021. It's on here. Charitable contribution, standard deduction. So you take standard deduction because you didn't add up to be more than standard amount. So you take standard. But if you take standard, your charitable donation, maybe it doesn't count, it got buried in there, right? So you can take the $600 into here. So this is what I'm telling you, because this $600 will actually reduce your taxable income. You see, taxable income is calculated on the bottom of the page. These are subtractions. These are subtractions to your taxable income. That means if you have a $600 taxable income, then you have a $600 here. That means your taxable income is 0. All right, so that is our day for today. And I do have a question coming from the audience. So I'll read it and see to see whether I can answer that right away. Let's say we try to do our own tax filing to save money since we just started making little money with our business. When we are more profitable and decide to get CPA, Community CPA to do our tax after a few years in business, what happened if Community CPA found some mistakes in the previous self-prepared tax filing? Such a great question. You have 3 years to correct a mistake you have filed before. So we're sitting in 2022, right? And April 18, we will finish 2021 tax return. So you will be, you have 3 years to go back. So that's 2020, 2019, and 2018. Okay, so those are the years you can go back. You can only go back. So you'll go back 2020, 19, and 18. So this is why right now, if you get an audit letter, you are getting it for 2018 because that's the last year. They cannot audit you for 18 anymore after the clock goes over April 18 of 2022. So if you made a mistake, we can go back 3 years to fix it. But a lot of times we actually make that decision with you. If you're really good with your bookkeeping, everything is black and white, and you ended up overpaying $3,000 a year on taxes, and we do that for you. But if your bookkeeping is not great, there are gray areas, and if I fix one hole and I open up another one, and then that really is not a good strategy. We look at your tax return, we reasoning that with you. So you will know whether you want to go for or not. That would including discussion about how much it would cost me if I do that. Of course, you don't want to pay, $3,000 on cost and then getting $300 back. What's for, right? And I would just let the clock runs, statutory limitation goes off, then mistake you had is sealed in the stone, and it's just normally doesn't come back until if they find out that you're a criminal and they had a reason to criminally charge you, then they can go back to whatever they want. But in normal business course, the IRS terminating, do not do audit after 3 years, the taxes is filed. So I hope that answered your question. And I really appreciate all of you being here. I hope you learned one thing or two, and I will talk to you again on Tuesday. And this Tuesday is 30-minute session. I'll talk about nothing but just first-time home buyer and tell you how exactly you can take advantage of that if you have a young kid and already adult, and maybe it is time for them to get their first home while the government has $15,000 to put back in your pocket. Okay, I'll talk to you tomorrow. I mean, not tomorrow. It is Tuesday. Bye-bye.